Sorry for the delay in some of the videos that we're putting out. Had a lot of clients that we were speaking to, a lot of things we were waiting to happen, and then just some issues with technology. So glad to be able to be back talking through some of the other aspects of the CARES provision. In this video, I want to talk about some of the aspects on the personal side of things that you as a practice owner can likely take advantage of, and I want to make sure that you're aware of it. So much focus on the PPP, the EIDL grant, that there are other aspects that are on the personal side as well as the practice side that I'll cover in a series of videos that we have coming out here shortly. So today we're going to talk about student loans, 401k provisions that are found in the CARES Act, as well as this home mortgage abatement that you might have heard about. So on the student loan side of things, there's actually two provisions I want you to be aware of. One is, if you have a student loan that is currently backed by the federal government, you actually have a suspension through September 30th that I want you to be aware of. Over that suspension time period, there's going to be no accrual of interest, so this isn't just missing payments. It truly is a full pause on that debt if you happen to still be carrying some of your dental school student loans. And involuntary collections have been suspended over that time as well, which means if you had any type of payment relation or arrangement that was automatically deducted, that should have ceased. If it did not, reach out to your lender, reach out to the organization, make sure that that is on their radar. If you have a private lender, many of our clients have refinanced their student loans, you can leverage that provision. Let them know what the federal government is doing, that you don't necessarily need that same level of suspension, but in terms of being able to repay over the long term, that you would like to see some type of arrangement to go interest only or possibly delay payments for a couple of months. Within the CARES Act, there is also an employer provision. So employer payments up to $5,250 can be made directly to the lender, and that's going to be tax-free to the employee and deductible to the employer. Now, if you happen to be both of those people, if you're an S Corp, more than likely you can take advantage of this. I would suggest that you speak with your CPA, make sure that that is how they are reading that piece of the legislation as well. But everything that we have seen indicates that if you're recently purchased a practice, still have student loan, there's $5,250 you can run through the practice, have that as a deductible expense for you, and be able to get that benefit as well. Within the 401k, so in qualified plan provisions, they made a couple of exceptions, and this is ultimately to be able to free up cash. And this is a really bad time to be getting out of the market. With prices as low as they are on the equity side of things, not a piece of the CARES Act that we would recommend you take advantage of, but I do think it's important that you're aware of it. So in your 401k or your IRA, you may withdraw up to $100,000 in 2020 and not face that 10% penalty if that is an early withdrawal. You can spread that income across 3 years so you don't have the full tax picture. Keep in mind, and I do want to highlight that again, you are going to be selling at market lows, so I do want you to avoid it if at all possible, but you can spread the income tax hit across 3 years. You also can repay that over the course of 3 years. There is also provisions within several 401ks that we manage. Oftentimes they're not universal, but if you've got a loan provision in your 401k, the maximum amount of that loan went from $50,000 to $100,000. So if you need to get liquidity from your retirement account, please talk to your advisor, because more than likely, if we have to do it, we'd rather do a loan than an actual withdrawal in selling any of the equity that you currently have. Bad time to be exiting the market. Other aspect about your qualified plans is the required minimum distribution has been suspended for 2020. So that applies to all 401ks and IRAs. If you turned 70 and a half in 2019 or earlier, so you've already been receiving RMDs, you don't need to take it this year. We do have several clients who are enjoying the clinical work post 70 years old, and some of them are taking an RMD and then immediately putting that back into the 401k. This gives us a little bit of a tax planning advantage for 2020. If you turn 72 in 2020, which was a provision of the Secure Act to increase the RMD age, then you do not need to take that RMD either. And for those of you who have inherited IRAs, where we did see in the Secures Act that has to be taken out over the course of 10 years, 2020 is going to be kind of a blank in that time period. You don't have to take that RMD. Last piece I wanted to highlight on the personal end, mostly because it's getting attention, not because I think it's going to be a good thing to take advantage of, and that is the mortgage abatements. So mortgages that are backed by the federal government can provide a 180-day abatement if you identify that COVID-19 is causing you economic harm. It does also include a second abatement for an additional 180 days. Note, interest accrues and everything is going to be due at once. So if you're in a cash flow strap now, having that type of relief for this time period, you could end up facing a very large bill at the end of it. So for cash flow planning purposes and financial planning purposes, we do not suggest that you take advantage of it, but if it is something that you're interested in, again, please contact your advisor. So those were some of the items on the personal side that I want to make sure that you're aware of. Again, so much focus on the practice and the loan provisions. I'm going to talk about some of the tax credits that you can get as a business owner and make sure that you have a good awareness of that as we move into the weekend. So hope you're having a wonderful day. Thank you very much.